Good afternoon. How's everyone doing? If you can hear me okay and see me, alright, drop a message, let me know. Hi everyone. We'll give it a couple of minutes before we get started. Hey Tariq, how you doing? Good morning, good afternoon, good evening. Hey Amar, how you doing? I'm very well. Well, I could be better. Didn't have a lot of super good trades. Could be better. See how my mood is dependent on my trading results or my trading outcomes. Hey Edmund, how you doing? Good afternoon, Mad Maniac and Jack. Good to see you all again. Well, good to see your names again. Getting our regulars on board. Hey Julian. Today we're here with IC Markets on a webinar doing the live market analysis. All is well. All is well. We're here on the webinar, so I've got nothing to complain about. I see you guys on board as well, so fantastic. Hey Jan B. Good to see you all. We'll give it a couple of minutes before we get started. Good afternoon, Imad. It's a good day to be doing the live market analysis today, given that we have the US markets on a bank holiday. We might see prices maintain at this level for a little bit before we see that volatility return. Amar, US yen for sure. I'll do that. Hey Dash. Hey Darren O'Shea. Good to see you. Been having a bit of a chat in the VIP room, so good to see you here. What about everyone else? Let's see. If you're new to this session, drop a message. Let me know where you're joining me from. If you're regular, say hi. Don't just sit in the shadows. And also, while we wait that one more minute, if you can help me out, click that like button. I'm sure you like the webinar, so click the like button now. And if you haven't already, make sure you do it later as well. Thanks, Imad. Lucia, for sure, gold will be a big one that I'll be looking at. It's a bit choppy. It's not a bit choppy. It's very choppy, but it will be one that we'll be looking at. No worries. Hey, and I've got US yen and gold for now. If anyone else has a request, do put it in. Happy to take on request. It's a bit like a radio talk show. So send in your request and I'll play it. Hey Simon, how you doing? Alright, one more like. Let's get it to 10 and we shall get started. One more like. Alright, let's get going. Again, welcome. Thank you all for attending the IC Markets webinar live market analysis. Today is Monday. We will be looking at the markets of what has happened last week, how it's influenced prices, and then after that into what could happen this week and where we could see prices heading towards. Okay, so thank you all for attending. If you do have any questions at any point in time, please feel free to put it into the chat. I'll be happy to address your questions. I'll be taking on requests if you have any currency pairs that you would like me to look into with a little bit more detail. Alright, so as usual, before we get going, any information contained on this webinar should not be construed as advice and is presented as educational material only. International Capital Markets has not considered your objectives, financial situation, and needs, and you should consider its appropriateness for your circumstances. The contents of this webinar and any accompanying material are not intended to be a solicitation of funds or a recommendation to trade a financial product. As you all know, in these sessions, what I tend to do is I look at a lot of different trade setups. I look at a lot of potential levels that we think that price could react off. Please do not just blindly copy a trade or jump onto a trade and follow it. Do make sure that you do your own due diligence. Check that the trade fits with your own strategy, your own trading methodology. And most importantly, I do get through a lot of different trade setups, currency pairs. If you do jump into all of them, then I'm almost going to guarantee that you will be over trading, over leveraged. So do take on that role of prioritizing and selecting the trades appropriately so you're not jumping into everything at the same time. All right, fair enough. Good stuff. All right. So introducing your host, myself, my name is Jin Dao. You all know me as Jin or JD. I'm one of the investment analysts here at the Everest Fortune Group, award-winning research team, technical analyst award finalist for best FX and equity research 2019, 2020, and 2021. I have previously worked in a multi-million-dollar FX fund, been trading for 10, 15 years now already. So I'll be happy to share with you my views, experience, learning points on the trading journey. All you have to do is reach out, let me know, ask a question. I'll be happy to share. All right. Hey Suki, how you doing? I am doing well. I could be better. I'm doing well. All right. So let's get to it. So as you all know, the first thing I do whenever I look at charts or whenever I look at trade, I always do check the fundamentals first. I look at the news, what has happened, where it should push prices towards. Then after that, I look into the charts to make sure that it aligns with where I think prices should be heading. Okay, so we'll do a quick review of what has happened since the last time we spoke last week. Hey Syed, I'm well, hope you're well. Okay, so Monday last week we had the Swiss franc with the CPI data month on month was minus 0.2%, expected 0.5, came out at a 0.6. Because it is a month to month data, we did see only a brief strengthening of the Swiss franc, the US Swiss franc, because when CPI is showing 0.6 compared to a 0.5, it shows that inflation in Switzerland is still growing at a higher than expected rate. And if inflation is growing at a higher than expected rate, what this means is that we could see the Swiss National Bank, the SNB, in their upcoming meeting possibly take on the decision to increase rates again. Okay, that's why we saw, let me just bring that up. Where is it? The US Swiss franc on Monday at 3 p.m. we did see, there we go, I'll zoom in a bit. That was at 3 p.m. here. We did see it strengthen a little bit, came all the way down to that 0.9198 or about that 0.92 level before bouncing back up again. Not a big sustained move towards the downside because it is a month to month number. Okay, so that was fair enough. We saw a brief drop, not really a trading scenario there unless you got in pretty much before the news. I don't normally recommend that. On to Tuesday, 14th of Feb, Valentine's Day, but we did have big presents from the markets. Okay, early in the day we had the New Zealand dollar with the inflation expectations quarter on quarter went from a 3.62 to a 3.3. So a drop in inflation expectations, which is why we saw here, now jumping to the Kiwi dollar, this is on H1 time frame, on the 14th of Feb, early morning at 10 a.m. Inflation expectations dropping, reducing the possibility, not not eliminating, but reducing the possibility of the Reserve Bank of New Zealand increasing rates further. Okay, that's why we saw the Kiwi dollar went from 0.6352 down towards that 0.6329 or 0.6330 level. Again, another short move towards the downside, not sustained because we saw it bounce back up and trade within this range. But you see that big spike and retrace back down. What happened there at 9 p.m. on Valentine's Day was we had the US CPI data. US CPI data was 6.5%, expected 6.2%. And I'll tell you that the markets were pretty much pricing it in. Full on, I haven't heard, I was reading reports left, right, center. Everyone was expecting 6.2 or even 6.1. No one considered that it would have been possibly slightly higher than expected. So what happened? At 9:30 GMT plus 8, when the CPI for the US year on year was released at 6.4%, go to the dollar index. I'll show it to you on an M15 time frame. Look at that. We saw the dollar shoot up. I'll show it to you on a minute time frame, if I can bring that up. It was quite a surprising move, or not surprising, but quite a big move. Okay, so you can see here. Sorry for all that scrolling around, but this is what happened. At 9:30 when the news was released, firstly, 6.4 initial reaction, a big jump, right? Because it's a green number, we saw the dollar index had a big jump towards the upside from 102.94 up towards 103.20, right? Big jump towards the upside. Hey Jamilo, how you doing? And then almost instantly, the next minute it retraced and shot down beyond what we expect, beyond the starting point, all the way down towards that 102.60 level, right? Down towards 102.60. Why this happened? I believe because it was such a priced in scenario, a lot of people were probably expecting 6.2, right? And if it's 6.2, the likelihood for the Fed Reserve to keep increasing rates would have diminished. With that, we would have expected a weaker dollar. And that's why we probably had a lot of people selling before the news, pricing in that scenario, shot up, hit the stop loss, came straight back down, hit those stop loss levels as well before pushing back up. Technical terms, I mean, depending on which method you follow, we could also say that it was grabbing liquidity towards upside and downside before trading higher again. I'll tell you that when I was trading this news event at 9:30 on Valentine's Day, I was looking at, first off, that point as a high. Oops. All right. And then that point as a low. Okay. So I just looked at it and I said, okay, I never get in before the news. First move shot up. I was thinking should keep going up because 6.4, inflation being higher than expected, we're likely to see more interest rate increases or higher likelihood for interest rate increases to come from the Feds. We should see this push up. It didn't. It retraced back down. My usual view is that it would come down, test this level, bounce back up, and then once it breaks above this level, I'll look at it as a consistent move towards upside. But that didn't happen. It dropped all the way back down, hit this level, and bounced. Okay, so from there, I looked at it and said, okay, great. All I'm looking for now is if I was to be super safe, it needs to break above this 103.20 level before I would expect a sustained upward move on the dollar index. Okay, A more aggressive view was that when it came down, bounced off this level, I had another level here at this point. And the more aggressive view was that if it broke above this point, then I would see a more sustained view, right? A slightly earlier view, or develop a slightly earlier view that is going to be more sustained towards upside. And so I didn't do anything over that few minutes all the way through 9:40. I sat there waiting, didn't break towards the downside either, all the way to 10. After 10 o'clock, GMT plus 8, then I started trading the dollar, trading with a bias of a stronger US dollar. All right. And then as it broke above that 103.20 level, again, that strength got reinforced, where we saw it trade all the way up to hit my resistance level of 103.50. Then I caught it off, right? Hit a key resistance, rejected that key resistance level, started turning back down. I wasn't going to do anything unless it broke that level. Okay, so that's what happened there. And I'll tell you that while I was trading this move towards upside, my main focus was on gold and the Aussie dollar. Gold and the Aussie dollar. I think I probably would have done one or two trades on the euro dollar as well, but primarily was gold and the Aussie dollar, just following on with that dollar strength bias. So that was the big news last week, CPI data for the US on Tuesday last week. And it was a big surprise. Following on from that, on Wednesday, we did have CPI data again, this time for the UK. And CPI was 10.5, expected 10.3, came out at a 10.1. Now let me ask you that question. Without checking the charts, with CPI going from 10.5 to expected 10.3 being released at 10.1, what would you have expected the pound dollar to do? What would you have expected the pound dollar to do? Anyone? Put it into the chat, let me know. Suki says weaken. HMH says bearish, got it right. Dreamfly says up. Nope, it did actually drop a little bit. Okay, if you got it right, click that like button. If you got it wrong, click that like button as well. All right, just playing with you guys. So what happened here on the pound dollar? At Jamila got it right as well. Where was it? Let me go back to the H1 time frame. Oops, get away. On the 15th. Oh, look at all that lines. So on the 5th, let me just clear all that out. On the 15th of, there we go, it dropped, right? 15th of Feb at 3 p.m. as it got released, it went from 1.2137 down, right? Straight down. One thing, it's following on. Why it went down so strongly was, remember that dollar strength, right? That dollar strength overnight pushing prices lower, and then at the news released here, again, inflation dropping more than expected, increasing the view that the Bank of England is less likely to hike rates further, right? Remember, I think we spoke about it the last time, a couple of times back, where it was viewed that, or the Bank of England had the view that they were at a turning point and inflation should be has peaked and is turning down. So that's why we saw this push towards the downside. Okay, so that was the news there. CPI took it from 10.5 to 10.1. Less likelihood for the Bank of England to increase rates further. Saw the pound dollar drop together with that dollar strength that we saw from the night before. And look at that. I can tell you I didn't trade this news event. 9:30 on a Wednesday night, retail sales data was minus 1.1, expected 1.9, came out at a 3%. came out at 3%. Big surprise. Huge surprise. Big swing from a minus 1.1 to a 3%. When I saw the news, when I saw the surprise, I thought, well, if we had a small increase in CPI data on the day before, and we saw a big move on the dollar index, with retail sales coming at 3%, we should be seeing a massive move on the dollar. But what actually happened? Again, jumping to the charts, on the dollar, oops, take that away, on the 15th, take these lines away for now. Oh, that's the 14th. Okay, on the 15th was here at 9 p.m. Okay, at that line there, put in the vertical line. So this is at 9. The dollar actually went up, but it didn't go up by that much. It went from 103.73 up towards that 104, almost that 104 round number, hit that round number level, stayed there, and then reversed back down through the night. Okay, so that's one reason why, or that's the main reason why I didn't trade on that news event, because I was looking at this. I had a key level at 104, so my resistance level at 104, because it's a nice round number. Price shot up, hit that level, failed to break above. So I just went, okay, if you can't break that, I'm not going to trade. Okay, so remember, clear rules, especially when you're trading news, you do need clear rules and clear levels on what needs to happen before you do jump into a trade. So that was retail sales number for the US. Big surprise, didn't see that big move, and in fact, we saw it retrace quite strongly the next day. Okay, why so? Not because of a news event, because on Thursday we had an Aussie employment number, employment change, unemployment number, all worse than expected. Small move on the Aussie dollar, and then not much news after that. PPI also better than expected, but we saw some upward move on the dollar, continuing on with the trend. I felt that it was more of a trending move rather than because of the news. And then on Friday, look what happened on the dollar. Right, so onto Thursday, it continued pushing up. We can see the news saw it push up, traded back down. Trend pushed the dollar continuing to the upside. It hit that 104.5, almost 104.65 level before a big retrace down late Friday night. Right, late Friday night. I can tell you, I wasn't trading on Friday. Why I try and avoid, because I was just sharing with one of the colleagues, is that typically when I see a week of big volatile moves, what I mean by big volatile moves, for example, moves like that, big volatile moves, and also big gains, right? It started with the week on Monday here. I'll zoom out a little bit, and then it ended the week pretty much big move from 103.22 went up to 104.65. What I anticipate is some level of profit taking from the markets as we head into the weekend, right? Some level of profit taking as we head into the weekend. And to me, that's why we saw that big retracement back down, right? That big retracement back down. Hey Diana, how you doing? Okay, so that is the recap of what happened last week. Any questions so far? Any questions so far? Okay, nothing. Good. I'll show you that I did actually do a bit of a preempting, a bit of a prep of the CPI data release. Right, so I was talking about the possibility that market data surprises the markets with a higher than expected release. And what we actually saw, I found it that should have come down to test this 102.65 level, hit that level, and then bounce towards the upside. Okay, so yeah, I will get into the weekly view ahead. We'll look into that. Okay, and also this was taken down, but I'm very happy to share that I passed phase one. With 15 days left to spare. So we'll see about that. We're now in phase two, and we'll see what happens there. Okay, so with that said, what could happen with the week ahead? Now, today, Monday, not a lot is going to happen. I was scalping the dollar index. Oh no, I was scalping gold. Right, I was scalping gold quite a bit. Was hard work, very hard work scalping gold because it's very choppy price action. I was sharing with you guys a possibly longer term setup if it did break a key resistance level. I'll show you gold here now. Okay, so gold was looking at the H1 time frame, had a resistance level at about that 1844 level, 1845 level. Was looking for it to break above that resistance level, and I think we did also have that trend line towards the downside. So if it did break this towards upside, I would be looking for a more sustained push towards upside on gold. Would need the dollar index to weaken quite significantly, but we're not seeing that right now. So I was anticipating that with the US being on a holiday today, we might see it not being able to defend its position, might see the dollar index weaken, could see gold push higher. Right now, still trading at that level. Wait and see what's going to happen. With that, if it fails to break above this resistance level, then I do have, I'll zoom in a bit. All right, I do have a level here at that 1837 level, so we could see it resisted, turn back down towards 1837. So with that, if it breaks above, then I do have a level. There we go. Okay, so 1837 would be about that 38.2 range on the fib retracement. Right now at that 50% level. If it does break above, we do have a level about that 61.8, and then also the previous swing high at that 78.6. Why didn't you draw from 1890? Where's 1890 is here. Yep. You can. So if I did that towards the downside, it pretty much lines up as well. All right. Let me just clear out some of this so we have a bit less lines. We had, I think only can clear out one line there. Okay, so you can see that 1890 would form that 23.6 level within this area. Currently at that 38.2 level, 50% and 61.8 will be at that range. Why I didn't draw, I saw your question on the chat as well, is why I didn't draw from this point on is because, take this away just so it's a bit clearer. I didn't want to involve that move, right? I didn't want to involve that move. I was looking for the immediate move at this point, right? So I was just looking at this move towards the downside. Not wrong to draw it from 1890 as well. And you can also see that the levels did line up quite closely as well. Okay, I hope I answered your question there, Jan B. So now looking at this, either reject, turn down, or break through. I would say that move and then a possible hesitation level at 61.8. So who asked for gold? Lucia asked for gold. I hope I answered your question there as well. Okay, I am looking at gold quite closely. I can tell you all that when I'm trading this account, I'm doing it solely on gold, 100% on gold only. I was going to do a stream on it, but I realized I ended up scalping. Um, my trades were all scalping trades, so it's very hard to do a live session on that. Okay, so I'm fully focused on gold now for this period as I enter into phase 2 and trade on gold only. All right, so that's going to be quite interesting. What's the CFD similar to ES future on IC US 100? Still doesn't much. I'm not sure, Diana. Let me find out. I'll drop you a message when I find out about that. I'm not too sure at this point in time. All right. So that's gold. Right now, zooming in, what I was doing today, right? What I was doing today when I came in at 10 a.m., I saw it bounce off this level, right? Why did I see it bounce off this level? I saw this move, and it was right at that 23.6. I'll take this away for now. So this is in the smaller term time frame. I saw it came down, bounced off this level. I was scalping it towards upside with that resistance at 1845. Right now, I'm sitting there, I'm waiting, I'm wondering whether it's going to break through or bounce down. Hence off, I'll wait till tonight and see. Buyers for this week will be, well, I have that level. I just need to see what happens that way. Just need to see what happens at this price level. If it breaks, then upside. If it turns down, then downside. No clear buyers right now, or not rather trying to predict it at this point because it is right at that resistance level. Are you playing a rebound off the level or direct break out of the level on gold? I would look for a direct break or either a direct break of this level towards upside or a rebound back down towards. So I'll be looking to sell down. I'll zoom in a bit. I would be looking at possibly that, right? Quick short trade towards the downside, or if it breaks above, then maybe about that, close out, and then something like that. So that would be the two kind of trades that I'll be looking for. If it does come down to this level, then I would say we might be looking at continuation towards the downside. Next support 1819 or 1820 level. If it breaks below the 1837, then further downside potential. Stop loss tight, take profit towards the downside. Okay. In 1 hour it's closing above the 61. We shall see. Let's see. Okay. I don't like it to get in right now just because it's sitting right at that level. Previous, you can see the last time it rejected. Over that couple of times it tried a fake break and then retraced back down. So I want to see it break through strongly, especially from this point onwards, to look for a buying opportunity. Okay. So that's gold. I think we spent a lot of time on gold. That's probably the first time we spent that much time on gold. Let's look at the US yen. Fair enough. Okay, US yen. I'll show you this on the. No worries. I can't remember. I think I was sharing with you guys this. Okay, just ignore this for now. So I was looking at this, and I have the lines there, so I'm pretty sure I was telling you all about this long-term trade towards upside trend line following, because it's got that level, came close here, came close there. Right, even if I did move it down a little bit to touch the points, one thing that triggered was that it broke above out of that trend line, right, the downward trend line, and then it went up and broke above that support turned resistance level. And most recently, this was on Wednesday last week, it broke above that 23.6 level, right? So it broke above that 23.6 level. Longer term view, remember this on daily chart, longer term view, I am looking for further upside, possibly towards that previous high of 61 at the 61.8 level, and that's why I have that arrow pointing up there. Okay, so you do want to be a bit wary of the 38.2 and the 50%, but I think we could see this go up towards that point there. Okay, that's again a recap of what I think in the longer term view for the US yen towards that 142 level, currently at 134. What you could even be looking at is a small trade, big move, stop loss, tight, 150, take profit, 750, big 1:5 risk reward ratio towards the upside on the US yen. Daily time frame. Okay. But looking at the H1, zooming out, take all that away. H1 time frame, looking at the way the dollar index is behaving, right? I think that we could see it consolidate at this level. So long as it stays above 133.25, we're possibly going to be looking at further upside on the US yen. Okay? And you can see here, the dollar, as much as it dropped on Friday, from Friday through early today as well, it is showing, price action is showing that potential towards reversing, towards the upside, pushing up. All it needs to do, or what will make me more confident, is if it breaks above that 104 level, 104.05 level. Or to be a lot safer, 104.10. Needs to break above that point before I would think that we're going to see a sustained move towards the upside, a re-strengthening of the dollar index towards the upside. And also, if I zoomed out, you can see that this upward move supported by that trend line, either I took the tail or if I took the body of it, you can see that it's found that support. Take that away. You can see that it's found that support here and again now. So those are the reasons why I do think it could push up, right? If it does break above that 104.10 level. Okay, so overall view, unless the dollar index breaks down from this trend line, I would still think that we're going to see it bullish. We're going to see it push higher, but it does need to break above 104.10 before we're going to see a sustained move. Fair enough. I do see your question there on the pound dollar, Diana. I will get to that. Any questions, any queries at this point? And if you haven't already, do me that favor, click that like button. Some negative divergence on stochastic and RSI on H1. We're starting with divergence. Look at that. I did a divergence as well. Reversal on the Kiwi dollar. I had a bullish divergence using the MACD at that support level. Was looking for it to push up towards the resistance. Hasn't happened yet. We might see it come back down, test the level, and push back up. I do spot divergences, but I haven't been happy or super confident to jump into a trade just because of the divergence. Okay, what you do want to notice, I do go off on a tangent here, is that Kiwi dollar, as much as there's a divergence, a bullish divergence here occurring, at that 0.62 level, there is a big news this week on the Kiwi dollar interest rate decision, looking to go from a 4.25 to a 4.75, 50 basis point rate hike to come, or expected to come, from the RBNZ. If that does happen, that could be the driver that's going to push price up, right? With that divergence forming additional um, stimulus or drivers towards the upside. So watch out for that. Okay. If you're looking at this, then let's have a look. We do see a bit of a divergence. I'll make a reference, but I don't see it that clearly yet. I don't see it that clearly, unless you see this. Nope. I don't see something lining up perfectly yet, but I'll keep an eye on it. All right. Okay, now who else do I have? Pound dollar. Okay. So pound dollar, looking at this, take that away for now. Well, look at it. It is finding that level of 102.50, well, 1.20.50, around that level, or 1.2060 in that area there. So a good strong resistance in this area, right? And the way we've seen the dollar index just a couple of minutes ago regaining strength, looking like it's possibly going to push above 104.10. If it does break above that point, then that's going to cause some downside on the pound dollar, right? It's going to cause some downside on the pound dollar. Previous swing low level at 102 or 1.2015. If it breaks past this point, let's zoom in a bit. If it does break past this support level, no reason why it shouldn't go down to 1.1930 or 1.1920. But it does need to break past that level. It does need to break past that level before we could see a big strong move to the downside. Okay, hope that answers your question there, Diana. If the dollar index doesn't break above, look at it now retracing back down. If we do see it break out of this towards 103.50, then the pound dollar would have to break above that, around it to 1.2080, to see further upside. I think that it would be a bit too optimistic to expect the pound dollar to push towards the 1.22 level, right? A bit too optimistic to expect it to push towards 1.22, because that would see, about a 120, 130 pip move, 40 pip stop loss, about a 1:3.5 risk reward ratio towards upside. As a trade setup, possible, but looking at the way price is moving, looking at the way that if you scroll through, there is no big news to come for the UK this week. It would mean that we have to see significant weakness on the dollar index to push the price up. And I think we might see that weakness, but we're possibly not going to see that significant weakness. Okay. With that, Aussie dollar. Okay, so for the pound dollar, I'm still looking at it, testing around this area, but if we do see a dollar strength, I'm looking for it to push back down. Break above, you could be looking for an upward move. Might not go all the way, might come to about that 50% level, about there. So you're looking at 1:1 risk reward ratio on the upside. Aussie dollar, Bear in mind, Aussie dollar is going to be could be heavily influenced by the Kiwi dollar with the news to be released on Wednesday. Then what you also notice is that it does have that, if I just took the body, that downward trend line as well, and also a good strong resistance there, right? Drag this right across, you can see that it found a bit of a support, it found that resistance area, and it's coming close in that region. So I think that it looks like we could see it test this level. If it fails to break, then we're going to see a resumption to the downside, right? But if it does break up again, would require big what's that called, dollar weakness to push this higher. Again, we could see it come towards that resistance at just below or just at that 0.7 level. This one could be a likelihood. If it does break above, you're looking at a 60-70 pip take profit, about a 20 pip stop loss, 30 pip stop loss, or 1:2 risk reward ratio towards the upside. Hey Kelvin, hope that answers your question there on the Aussie dollar. Okay. Alright. Then pound yen. Jamilu is asking about pound yen. I was looking at pound yen as a big move ahead, potentially, for the pound yen. Right, it came back down. It's testing right at that level again. You can read more about that there. I'll put the link in there for you guys. Okay, and if you haven't already, do click a follow. But my view on pound yen, and this applies right across the board, is that the pound yen on the H4 time frame has found a big strong resistance at that 162.30 level, right? Resistance range in that area. It's tested once, failed to break above, twice, 3 times, 4 times, 5 times failed to break above, and now recently testing that level again. This is on the H4 time frame. What we are looking for here is if the pound dollar strengthens significantly, could push the pound yen to break above this level. If not, I actually do look more towards the dollar yen weakening. All right, we're anticipating that big push towards the upside on the dollar yen that could drag the pound yen up. Okay, so yes, it could just get resisted and then trade back down again, maintaining within that range. We do have a bit of a trend line there. It's going to bounce. It could just bounce within this region. Right, it could just, oops, what am I doing? There we go. It could just trade within this region, but what am I looking for? It's for this to break out for that big upward move. You see that big gap in the middle there? I'm looking at a possibility of this coming up towards that 61.8 level, which coincides with those lows there. Right, so I am looking for a move about that. If it does break above, it could very well get to 167, but 165 would be a good first target as well. You could be looking for a buying opportunity. If it breaks above, take profit, good 200 pips, stop loss below. Even if you put it at 100, it's a 1:2 risk reward ratio towards the upside. All right, hope I answered your question there, Jamilu, on the pound yen. And what you'll also notice is that it also applies to the euro yen, or rather it's more developed on the euro yen. Same view, H4 time frame, big resistance. It's broken that resistance level. Retrace, again, could be looking for further upside. If it comes down, test this level and bounce back up or breaks higher. So I've got that range there. near-term resistance at 146.65. Okay, so very similar patterns here on the pound yen and the euro yen, and possibly even the Aussie yen. Not so much in this case. We haven't seen a big clear resistance. It's covered that drop already. So I wouldn't say so much on the Aussie yen, more on the pound yen with that potential, and also on the euro yen with that potential. If it does break above this point, we could see, let me just check. Right, it's right at that 61.8 level. So we could see it break up, and then you'd be looking at possibly buying, take profit, 276, stop loss 100, 1:2.5, risk reward ratio towards upside. You could be looking at getting out halfway in the middle at about that 145 level as well. Okay, so a lot of trade ideas. Right now, prices are forming, are setting up. Hasn't really broken any clear levels, especially with what we've seen on the retracement on Friday, but it is setting up quite nicely. Most important at this point is to be setting up your watch list, identifying the possible setups of what we've just done here, and then checking back whether it's broken or not, whether it's time to get into a trade or not. So far, so good. Any questions? If you enjoyed the session, if you found what I've just shared with you useful, informative, click that like button, helps with the algorithm. And if you haven't already, here is the link as well. You can jump on that. I was looking at the I don't, but I could. I'm looking into it. I'm trying to find a way to do it more effectively. Well, if you subscribe or if you follow, then it will just ping you whenever I send something out. Okay, so this is the CAD Swiss franc. I had that big bearish pennant formed. We saw one formed in July last year all the way to November, broke strongly towards the downside. Now again forming up. Right, again forming up. We did see a few breaks. Could be refined, but now it looks like it's broken towards the downside. I am looking. Aggressive move will be now. A bit safer will be if it breaks below that 0.6790 level, with the target at 0.66 as a round number support level. Okay, it's all there. I should be updating this. Alright. For the rest of the week, what do we have? We do have CPI data for the Canadians to come tomorrow. Currently, no expectation yet, so I'm not going to stick out and give you my view on where CPI could be. I do think that it might be a little bit higher than expected. Might spur the Bank of Canada into some rate increases. But let's wait to see what the expectations are before we form a view on the Canadian CPI. A lot of PMI numbers to be released this week. You see for the Eurozone PMI numbers, services and manufacturing. For the UK, manufacturing and services PMI as well. And for the US, unfortunately, right now with the markets, the focus is not on PMI. It's not so much on PMI. It's not even that much on the GDP. It's more on inflation. It's more on interest rates. That's why I haven't focused too much on telling you about the PMI data to be released this week. We spoke about the Kiwi dollar with their rates decision. FOMC meeting minutes. I don't anticipate this to be a big surprise because it is meeting minutes. It is talking about what has happened already, so not likely to be a big surprise there. US GDP 2.9, expected 2.9, likely to stay at the same level. No big surprises. This looks new. I didn't notice this. What you do want to focus on Friday, 9:30, core PCE price index. this is the inflation data number that the Fed reserves pay a lot of attention to with the core PCE price index. So watch it. If it does come out at a 0.4 or 0.5, maybe 0.6, that's going to have a big, or going to lead to a big move on the dollar index, right? On the dollar index. So watch out for that. Can a fib retracement be used on a 5 minutes and 1 minute time frame? It can. It can be used on any time frame. Just make sure that you identify the right points to draw your Fibonacci levels, or starting point and ending point. All right, so watch out for the core PCE price index to be released Friday. US core PCE price index 9:30 GMT plus 8. That's likely to be a big news event. Likely to be a big news event. And this is interesting. I didn't notice this until now. So Governor designate Ueda speaks might be a event that we could see a view. We could get a sneak peek into what the new governor for the Bank of Japan is planning in terms of monetary policy for Japan. Might lead to that big move that we've been talking about on the US yen. And also, just before this session started, I was anticipating a big move on the yen as well, because Deputy Governor has said that they have operational tools to achieve exit from ultra loose monetary policy. Exit from ultra loose monetary policy. It's more difficult to decide whether conditions have been met to exit. So it's interesting that they're talking about exiting the ultra loose monetary policy with a new governor coming on board, I think in April. Right, so let's watch. I'll be watching the US yen with quite keen intent. Which time frames or which settings will it be best? You can't, well, it depends on which you're comfortable with. I do use the Fibonacci's on M1, M5, M15, H1, H4 as well. So whichever time frame you're trading on, you can. Whichever, just depends on what you're most comfortable with. All right. So as we come towards the end of the session, I hope you had a great session. If you haven't already, click that like button. Can we get to 30? Just jump onto the link, click follow. I think you can get the alerts. If not, then I'm sure I'll figure something out. I'm terrible with tech. I'll figure something out. Thank you all so much. Please remember, as much as it's not a lot of big news events coming up, please remember, do trade well, trade safe. And hey, if you do have any comments or feedback, please put it into the chat. I'll be more than happy to take those on board. You're most welcome, everyone. Matt Maniac, Diana, Ursad, Dreamfly, Kevin, right? Do let me know. Put it into the chat if you got any feedback or comments. And if you haven't already, click that like button. We're at 27. I want to get to 30. Can we get to 30? Thank you, Simon. You're most welcome. Thank you, HMH. I won't forget, it's in the chat already. I will refer back to that and then also get back to you on that. Thank you. Now on to stage 2. So we shall find out what happens on stage 2 or phase 2. Sure thing. I'll get back to you, Diana. Alrighty. So with that said, we haven't got to 30 yet. A little bit disappointing. Thank you all. Do take care. Trade well. Trade safe. And come on, anyone else before I end the session? We're at 28. We need 2 more. 29. We need 1 more. Alrighty. Thank you all so much. Do take care. And I'll see you again. Bye bye now.